Welcome to the Fintech One-on-One podcast. This is Peter Renton, chairman and co-founder of Fintech Nexus. I've been doing these shows since 2013, which makes this the longest-running one-on-one interview show in all of fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the Fintech Startups podcast with Todd Anderson, and Fintech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Before we get started, I want to remind you about our comprehensive news service. Fintech Nexus News not only covers the biggest fintech news stories, our daily newsletter delivers the 10 most important fintech stories into your inbox every morning. And we have special editions for Latin America as well as UK and Europe. Stay on top of fintech news by subscribing at news.fintechnexus.com/subscribe. Today on the show, I'm delighted to welcome Edward Woodford. He is the CEO and co-founder of Zero Hash. Now, Zero Hash is super interesting. They're in the crypto space, but they're in the infrastructure side of crypto. They provide embedded crypto infrastructure to a whole range of fintechs and non-fintechs for that matter. And we obviously talk about how that all comes together. We also talk about the challenges in the crypto space over the last 6 to 9 months. And Edward's very open about that. Does not believe this is really going to be an impediment long term. He does have a long-term view. He always has had that, very much focused on regulatory compliance, which we also talk about. We talk about how, decentralized finance is going to come into play here. We talk about how, crypto could become a mainstream payment mechanism. And we touch on smart contracts and a lot more. It was a fascinating discussion. Hope you enjoy the show. Welcome to the podcast, Edward.
Yeah, thanks for having me.
My pleasure. So let's kick it off by giving the listeners a little bit of background about yourself. You've had some interesting stops in your career. Why don't you give us some of the highlights?
Yeah, so moved to the US for grad school, then founded my first business that was regulated by the CFTC. So I started and was always stayed in the regulated fintech space, and then founded Zero Hash in 2017.
So tell us about that, the founding story. I mean, we obviously had the first bull run of crypto, or maybe not the very first, but the first one that got big attention in the broader media anyway. What was the founding story? What did you see that really needed to be solved?
Yeah, so started the business in 2017. I mean, drawn to the crypto space in part because a lot of people were self-selecting out of crypto. It's amazing to see how quickly the space has evolved to be something a little bit more mainstream. Mm-hmm. But really had got involved with crypto when I was doing my grad studies at MIT, big, obviously, Bitcoin community there, and realized based on my first business that was a regulated business that we were 10 years too early on our first business. But It took us 2 years to figure out that we were 10 years too early. And so became really, really passionate about infrastructure as a service effectively. And that's really what led to Zero Hash, which is, the older axiom in startups is fail fast. Well, in a regulated business, it's really hard to fail fast. One, because the fixed costs are so high. Two, you need to get to the start line. And so that's really how Zero Hash was born, was out of the first business and kind of those own experiences that I had.
Interesting. So then your first business, maybe you could just describe it a little bit for us, because you said it was regulated by the CFTC. And obviously the CFTC officially today, as we're recording this in mid to late February, that Bitcoin and Ethereum seem to be a commodity. Let's see what happens there. But tell us a little bit about your first business and how it kind of interacted with the regulators.
Absolutely. So we launched a derivatives platform for emerging agricultural markets. So in the United States, effectively, commodities fit within the purview of the CFTC if they are a derivative contract, right? So spot contracts are commodities, but they are not necessarily regulated by the CFTC. That's why crypto, Bitcoin, the futures trade on the CME is regulated by the CFTC, but we, for example, as a spot platform and our clients are not regulated by the CFTC.
Mm-hmm.
So the first business was an alternative market for alternative commodities, and it was derivative contracts, hence why it fell within the purview of the CFTC. Obviously, good experience. We built out the infrastructure. We were able to sell the regulatory infrastructure as well, but learn some good lessons. And again, like I said, made me really passionate about this infrastructure as a service, and ultimately led to Zero Hash, and we call that crypto as a service.
Right. So maybe just tell us a little bit about that core offering then. What, how do you describe it, and kind of who are you selling to?
We take the view that crypto is a technology, not an asset class. And so in theory, our total addressable market is, in theory, any business with consumers. To give you one use case, for example, we power one of the largest brokerage firms in the United States, for example, Tastyworks. And we let their clients buy, sell, hold, send, receive crypto as a tradable asset, right? So traders. We also power groups such as Stripe. So there, the use case is effectively leveraging crypto as a payment mechanism and effectively powering Stripe's on-ramp and off-ramp. And the broader thesis there is that as businesses become more Web3 enabled, whereby ownership exists on the internet, crypto, which underpins that, you need these payment mechanisms, these payment rails. So we, for example, offer payment rails. So our business is very, very broad because we take a very broad view of what crypto is and what it can be.
Okay, yeah. So I want to talk about the Stripe thing in a little bit, but I want to dig into kind of some of the things you said there. So, like, how do you interact with the exchanges, with the decentralized platforms? Where do you fit in the crypto ecosystem?
Yeah, so think of us as similar to, say, banking as a service or brokerage as a service in terms of maybe more traditional fintech. We offer an API infrastructure that allows customers to offer their customers through their own front ends the ability to buy, sell, hold, send and receive, gift, right, digital assets. And so we are this API infrastructure. Every end customer is legally our customer. So we have now millions of end customers, but they interact through the front end, through the platform, through the brand, whatever you want to call it, the middle B, right? So we're a B2B2C business, allow them to offer that experience natively within their own infrastructure. So embed in it and embed in our APIs.
Then are you going out onto the open market, buying and selling on behalf of your clients? And I mean, who's doing the custody as well? Can you just maybe tease it out a little bit?
So what I mean by hold is that we are the custodian of those assets. So we hold the crypto assets for the end customer. And when I say buy and sell, we are effectively the counterparty. At a simple level, we are the counterparty to the transaction. And then we hedge ourselves. So we basically are risk principal. We hedge ourselves against other liquidity providers, but every end customer is effectively trading against us, and we're effectively hedging ourselves immediately. So we're a pure liquidity risk principal entity.
So someone goes through one of your customers and wants to buy 0.01 Bitcoin. Just take us through the flow. What happens? So
at the most simple level, if somebody wanted to buy 0.1 of a Bitcoin, effectively that price would be presented either as a notional or quantity to the customer. So in this instance, it would be a quantity. But obviously as well, we can support, for example, I want to buy $100 worth of crypto.
Sure.
That is presented, for example, I'll use a real customer, for example, current. So there is a customer and it's presented out on the current platform. Effectively, when you hit buy, you're legally trading against Zero Hash. And so Zero Hash will then fund your account with 0.1 of a Bitcoin. The beauty of this is that all of the cash is at your current cash account. And so effectively, we will then net settle up with current to make sure that we get paid on that transaction. But the beauty of this is whether it be a brokerage platform, a neobank platform, a payments platform, the beauty is that you're using the existing fiat rails, the existing fiat infrastructure that you're used to buying a stock with or anything else. And you're using that infrastructure, that fiat infrastructure to buy crypto really seamlessly. So we present the price, you hit the price, we'll fund your account, and then us and the platform will take care of the logistical fiat back and forth.
Right. Gotcha. Okay. So before we go any further, I think we do need to talk about the year that was in crypto, 2022. it was quite the year. We started off with a lot of optimism, and it ended up being a much worse year than anyone ever could have anticipated. So what was that like for you guys? How did you navigate this very turbulent year in crypto?
Yeah, I mean, we've navigated it strongly. We did not have any balance sheet losses against FTX, Alameda, Genesis, any of these groups.
Mm-hmm.
And I think that's in large part because we said no to certain business lines that we felt just did not make sense. Sometimes it's too good to be true. It's too good to be true, right? Or it's often too good to be true.
Mm-hmm.
I think often people think of revenue just in a kind of a single sense. We like to take a view of risk-adjusted revenue, and we like to know where we're taking risk and where we're not taking risk. And we did not enter that kind of rehypothecation lending market that has obviously come back and impacted a lot of players in this space. Clearly, the ramifications are larger. There's questions from our partners. There's questions from banks. There's obviously a greater sense of nervousness. Fear is contagious, right? It was definitely a busy couple of weeks, answering questions. But we've always been ultra transparent with our customers, with our partners, with our banks. We've been around since 2017, have audited accounts since then. We're very transparent. We have public boards. We're regulated, including by NYDFS. But we don't view regulation as the goal. It's the floor. And so a lot of what happened was just flagrant fraud, flagrant stupidity.
Right.
And just people not doing things the right way. And so we were set up in a pretty good sense. We'd said no to a lot of business that we felt just did not make sense. And, 2022 was the year that shook. 2021 was the year that all looked very, very attractive, right? And so sitting here and saying no to that stuff is sometimes difficult.
Well, I imagine that's what I was about to ask you, because, when Bitcoin's getting up to past $60,000 and everyone's jumping in on the bandwagon, and, it's like sort of real estate in the mid 2000s. It's like it just keeps going up and everyone's getting in on it. I imagine that you had some use cases with people saying, you guys are idiots. You should be taking advantage of all of the other parts of crypto that the FTX and BlockFi and Genesis and what have you have been taking advantage of. What was that like?
Look, it's not like we turned around and said, "Told you so." So it wasn't good for the space, right? This wasn't something that we wanted or wished for. But fundamentally, we take a really long view on crypto. We are here for the long term. We're not here for the short term. And so when you take that long-term approach and say fundamentally what is important to the space, and if you take that long-term approach, it actually is much easier. But yeah, sure. Look, people flip, investors flip. Investors are tending to spend more money. And then, 6 weeks later, they're saying spend less money, right? I think, honestly, I spent my entire career in frothy industries.
Right.
And it makes it much easier because I literally see my responsibility, my role is to narrow the emotional bound. So when things in 2021 became very, very frothy, is to kind of narrow that and temper that. When things have become fearful, it's to temper that as well. And it's not that you don't react, you don't kind of temper the sail, so to speak, but you're not trying to tack left, right, and center, or put your foot on the accelerator, foot on the brake. And I think that's what leads to a good long-term business. We were built profitable business in 2021. Having a large amount of cash on balance sheet definitely helps. We did our Series C and Series D in 2022. So it allows you to take this long-term view on things. But I just think it's a fundamental kind of intrinsic way of what are we building here? Like, we want to add value, which means looking for the long term. And how do we want to build this business? And it's basically building on a long-term sustainable business versus kind of this accelerate break mentality. A lot of VCs and a lot of VC-backed companies have been guilty of.
Right. Yeah, that makes sense. So then, as you look ahead now, obviously the FTX debacle is still playing out, and it's going to play out over months and years. But the reality is that the crypto industry has lost the trust of mainstream financial institutions. Not completely, but people aren't as eager and as willing to kind of jump into crypto as they were, 2021 and early 2022. What do you think the crypto industry, and this is a bigger question than obviously about Zero Hash, what does the crypto industry need to do to regain the trust that it once had?
It's fundamentally just being transparent and honestly learning the lessons from other industries that have had blow-ups. It is around just getting back to fundamentals in my view. I don't believe any of this is rocket science, and fundamentally it's going to take time. And so I think those are the key aspects, right? We've launched an initiative called Mission Trust. We're in San Francisco last week. We hosted a panel with, for example, some of the leading fintechs, groups such as Juno, Neum, both of which are clients, as well as, for example, Plaid. And so groups such as Plaid and all these other players, I think, will also bring credibility, bringing their experiences as large traditional institutions to play here. But I mean, in short, it's getting back to basics.
Right.
Proper governance, proper audits, proper approaches, and letting some of that froth kind of just dissipating is honestly no bad thing.
Right. But I look at your company and it feels like this is really embedded finance. It's embedded finance with crypto as the core of it. And embedded finance itself is a trend that has a lot of legs, and it's been something that it continues to become more and more mainstream, shall we say. We're plugging in a piece of infrastructure into your bank or into your fintech. That feels mainstream today, and it's just growing in popularity. Is that how you kind of think about what you're doing?
Yeah, I mean, I think it's part of it. I mean, embedded finance, the way that I would define it is, more traditional brands entering the crypto space. So every company becoming a financial services company, right? I think that's certainly part of it. I mean, our view is that every company over time will become a crypto company. A great example of that, for example, is DraftKings. So DraftKings is publicly a customer of Zero Hash. That is a non-financial services brand, and I think ties into kind of this embedded finance or this embedded crypto thesis. They're doing a lot of interesting things around how you can tokenize, how you can create game experiences around that. So I do think that's part of the strategy. I mean, a big part of it as well was just traditional financial firms entering crypto for the first time, which I would say is we're an embeddable product, but those financial services firms I don't think would definitionally define it, fall into this kind of embedded finance theory.
Right. That makes sense. So I want to talk about Stripe. I mean, Stripe is sort of the largest private fintech company in the world. They're a behemoth and have pretty much a stranglehold in the payment space when it comes to fintech. Anyway, tell us a little bit about how that all came about. I presume it started during the go-go days of crypto, right?
Yeah. But I think Stripe, if you actually look at the history, actually engaged with crypto much, much earlier.
Right.
What's been interesting is when everyone thinks it's a good idea, then it certainly makes it easier to get people to buy into it. But a lot of these groups, a lot of these traditional financial services, like these fintechs, are inherently interested in crypto and how it can fundamentally alter mechanisms. If you look at, for example, Stripe, if you look at their slogan, I think it's powering the internet. Now, what does that mean, right? Well, the internet is changing. And I don't want to speak for Stripe, but if you look at their blogs, they fundamentally believe that the way that people interact with the internet is changing. And so they, as a payment institution, need to adapt, need to evolve with how people interact with the internet. And so if you think of a good example, Nike Swoosh, for example, here that is built on a blockchain. And for the first time, a payment institution actually needed to interact with crypto, right? To buy that NFT, for example, if it's built on the Ethereum blockchain, you need to send Ethereum to that blockchain. Right. Yet the customer just wants to buy the NFT.
Yeah.
So that bridge, that thesis of the way that the internet is changing, I think is a much more long-term view that Stripe is taking, and decoupled from, I would say, the noise around crypto. It's more of a fundamental technological shift that we're seeing. And how do you interact with that? How do you provide the rails around that?
Particularly given the timing of the announcement when crypto is going through a lot of tumult, and Stripe is a big and stable fintech company, as I said. What do you think do you think that has kind of helped, stabilize some of the thinking around crypto? Or what impact do you think it's had?
Yeah, I mean, look, I think it certainly shows that companies are still investing in this space. I think one of the great things is that in some ways, the concept of price, the conversation of price around crypto has largely become decoupled around interest, right? So now we're talking about, okay, are there real use cases? Are there real companies, right? Those are much better discussions to have. That interest in crypto is just one-to-one linked to price. So I think that's a good part of the story. But we are still in relatively early innings. But Stripe, no doubt, is seen as the market leader. And for us, we're looking at other acquirers, looking at other traditional payment players, it's certainly adjusted the conversation. because Stripe is seen as on the cutting edge of innovation, and a lot of people tend to replicate and think about that. So for sure, it's encouraging with the timing.
Right. So I want to talk about Web3 and decentralized finance in general. Because you talk about like the Nike example is a great example because it's an NFT that sits on the blockchain that is decentralized, but it's coming through a centralized company. Like I think no one would confuse Nike with being, anything but a traditional firm. Is Nike a Web2 company? I don't know, but certainly, Stripe, I would say, is a Web2 company. A lot of the tech companies out there we sort of put into Web2. How is Web3 going to transform these Web2 type companies?
Yeah, so I think when often people talk about Web2 and Web3 as if they're these binary things, right? I mean, they're actually accretive, right? So if you look at the definition of Web3, it means that effectively you can read, write, right, which is Web2 plus own. And so it's Web1, Web2, Web3. They are building on top of each other. It's not completely undercutting what the other one is. Right. And so Web2 companies will also be Web3 companies. We like to subscribe to Moore's law that the adoption will be significantly quicker than the adoption of companies as Web1 companies to Web2 companies. So we're incredibly bullish about this. In terms of how it will transform businesses, it's going to change the way that customers interact with brands. It's going to change the way that customers think about ownership. And I think the use cases are broad, ranging from obviously gaming, which obviously exists, and has obviously existed without a blockchain, to, for example, consumer brands. But we're still very much in the early innings around that. But if you look at the brands actually entering the Web3 space or actually having Web3 initiatives, these are the largest brands in the world. I mean, you look at some of the announcements that MoonPay has made, and MoonPay is also a customer of Zero Hash. You're looking at, for example, Universal Studios. You're looking at these major organizations. You're looking at Disney. You're looking at Nike. You're looking at fashion brands. It's pretty incredible. And then obviously, I think when you start thinking about music royalties, there's a lot that's being done around there. So this technology isn't the silver bullet for absolutely every single business out there. But I think the use cases are starting to materialize really, really quickly. And our role is to serve as infrastructure for that. Right.
So then let's talk about payments for a second, because obviously Stripe are getting into this from a payments angle. When Bitcoin first came on the scene, a lot of it was talked about as a payments mechanism that hasn't really come to pass for the mainstream anyway. Do you think that is in crypto's future, that it will become a mainstream payment mechanism? And what will it take if that is the case?
Yeah, so my view is that it will be part of the payments infrastructure. It's not going to be the entirety of the payments infrastructure. And I think it really depends, right? We tend to talk in broad strokes, but just kind of tangible examples, right? We've spoken about Web3 businesses. For the first time, if you wanted to interact with a smart contract as a payment mechanism, you need to actually own crypto. So that's one example of crypto as a payment mechanism, as a means of transfer in order to buy a good. If you look at, for example, what I think is really interesting is remittance businesses. I think that's pretty interesting. But when you talk to some of the largest players in the world in traditional finance, what really excites them about blockchains is they call it sometimes the network of networks. So obviously there's a huge amount of work that's being done in the United States and in other places around the world, in particular, for example, Brazil, which has really led the way with PIX around real-time payments.
Yep.
But how do you get one real-time payment system to talk to another real-time payment system? Obviously, Australia, the original homeland,
yes,
has a really awesome real-time payment mechanism. So does the UK.
Has had for a long time, actually.
Exactly. And so how do you get these two systems, these multiple systems, to talk? And I think that's another use case around the blockchain. So again, people still use cash, people still use debit, people still use ACH, and they'll still use real-time payments. It's not that these things will replace one another. I think it's going to be part of the ecosystem. And when there's real use cases, such as this kind of network of networks, transfer in value, cross-border, those are really interesting use cases.
So then when you think about your business and or maybe even crypto in general, what are the most exciting use cases? Where is this going as that you feel like most excited about?
I mean, look, crypto is going to be a tradable asset that will exist. Bitcoin is certainly here to stay. And I think, you can take different views around why people should buy crypto. But if you just look at it on a returns basis, if you have 1 to 5% of your portfolio on a risk-adjusted return Sharpe ratio, it makes some sense, right? So there's these fundamental pieces that exist. We've touched upon a lot of them. I think the adoption of Web3 and how crypto can adapt the way that the entire concept of the internet works. I think the entire way that payments can be done seamlessly cross-border is incredibly interesting. The ability for gaming, I think, is super, super interesting around those different pieces. But again, we view crypto as a technology, not an asset class as in and of itself. And I think the innovation and adoption that we've seen is incredible. Obviously, if you look at VC funding, one of the benefits of kind of the frothy year, or maybe it leaked into years, is that a lot of money went to a lot of smart people doing a lot of smart things. And I think that the use case conversation will rapidly evolve in a whole host of different areas. There's a lot of experimentation going across the board, which makes us very, very bullish about the space as a whole.
Right. And do you feel like the decoupling of the price of crypto, because there was always this preoccupation with so many people about the price of crypto, and let's face it, it's been pretty stable for the last several months, despite all the FTX stuff. I think that's truly amazing that it has maintained that stability. Is it now decoupling the technology that you're talking about, the crypto technology, rather than the crypto price? Have we moved beyond that now, do you think?
I think so. Again, crypto is a very broad thing. And so when I think of, for example, payment mechanisms, right? So if you're using, for example, Stellar as a means of payment, and then we're talking about fractions of a penny, even if the price of Stellar increases or decreases, it's not making a meaningful change to the way that you're thinking about crypto. If you, for example, think about an NFT that's being minted, assuming that gas fees don't spike, which is somewhat separate from price, again, it doesn't make too much of a difference. So I do think as the use cases evolve, the conversation around price for a portion of the space also goes away, because you're not actually using crypto as a store of value. You're using it as a means of transfer or as a fundamental technology, and the price then doesn't matter so much.
Right.
In that Stellar example.
Yeah. Okay, makes sense. So last question then. I mean, what are you working on right now that you're excited about? I mean, what's coming down the pipe at Zero Hash?
Yeah, what excites us is just global expansion. We now power some of the largest financial services and consumer brands, and these companies are global in nature. So, in the last year, we've got registered in Australia, in New Zealand. We now have entities in places such as Brazil, the UK, the Netherlands. We're obviously highly regulated in the US and in Canada. And so being that one-stop shop for brands, one-stop shop for fintechs is really what excites us. And so that's really that is really our core driver of growth in 2023.
Okay, well, Edward, we'll have to leave it there. Thank you so much for coming on the show, and best of luck to you.
Thank you very much.
If you like the show, please go ahead and give it a review on the podcast platform of your choice. And be sure to tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.